Analysts and economists have dubbed Finance Minister Tito Mbowene's 2020 budget as business and growth friendly. They have praised him for putting money back into the pockets of consumers.
It's the first time we are actually seeing consumers being helped. No VAT increase. Lovely for households. Really it's been shocking the financial vulnerability that households have fallen into in South Africa. And of course an adjustment for fiscal drag. And that means actually giving money back into the pockets of consumers from a real perspective, adjusting for inflation.
The National Treasury is finally saying that we want to move away from relying on tax increases to stabilize public finances, and they want to start looking very deeply at the expenditure side to do that. And I think that for me is a positive, because we know that when you look at South Africa's public finances, I don't think that it's a revenue problem. It's an expenditure problem.
The biggest part of the budget relies on cutting the public sector wage bill, a move that unions are unhappy about. Analysts are also concerned about the state-owned enterprises and their continual bailout support.
So there is a plan to cut the wage bill by 160 billion rand, but support for SOCs, and more specifically Eskom and SSA, actually rises. It's going to be about 110 billion rand over that period of time. So I think there's still some big challenges as far as stabilizing SOCs is concerned, and for me I worry that the risk is that they may have to provide more support going forward.
It remains to be seen how Moody's will react to this budget in March, but there's a general expectation that the negative outlook may remain. Yesterday, markets seemed to give a nod to the budget recovering by 100 basis points.
The positive that us as traders took out of it was the fact that he did hand out money. So if you look longer term, then one would look at your rand hedge stocks or take your safe haven stocks into account, like your precious metal stocks. The minister also mentioned yesterday that the basket of PGM prices is actually performing extremely well. So South Africa can also benefit from that, because we do have the platinum mines in this country. So that will be a nice money spinner for government as well.
Investors shouldn't panic. I think market reactions on short-term news is not the right way to run a long-term investment portfolio. If your horizon is a bit longer, I think South African domestic stocks are offering fantastic value. I can't promise they're going to make a buck in the next month or two, but I think over a 5 or 10-year view, it's a fantastic place to look at investing now. People have forgotten about this economy. They want to put their money offshore, and so generally an investor makes money where other people aren't. And this is why I think it's a really great place to start looking.
Economists believe that detail was still thin on how the envisaged sovereign wealth fund would be funded.
It was just a very small little snippet in the budget, just about 2 or 3 lines really saying that they're looking to garner the money from spectrum payments. And of course, typically a sovereign wealth fund is a funny question for South Africa. It's used internationally when you have a budget surplus, when you've got a lot of money and you're saving a lot as government, and of course also when you've got a commodity boom for commodity exporters. We don't have any of those things, so it is a bit confusing exactly what it's going to be. But of course we're still waiting for more information. Let's hope the spectrum does yield a lot of cash.
Diabo Seto, SABC News, Johannesburg.